Greetings, market rebels. Welcome to this week's macro measure and sector situation combined video. It is Sunday, September 15th, 2024. It's a little in front of 1 p.m. here on the East Coast. I'm Wayne. Here is our trusty disclaimer, which will be followed by our trusty intellectual property rights notice. And then we will get into our video. I had all kinds of things I had to attend to, and I had to travel to do it. Worked on the road, actually, in touch with my son and Ryan on the telephone, making sure UOA was taken care of on Friday. Luckily, I had my laptop in my lap, and there was a driver and all that, so it all worked out for me. But anyway, most of the fireworks for the week were happened earlier in the week, which we'll see. And then the kind of so Friday was kind of a little bit of a, I guess, I don't know, kind of like stall out the clock if you're a bull type of a performance. But anyway, welcome. And this week will be even less polished. I don't think we could ever confuse this recording with being a polished one, but it'll be even less polished than usual, I think, because as a result of traveling, I'm under time pressure to get this done, even more time pressure than usual. So hopefully it'll still be worth your while. That's what I hope it will be. But anyway, the major aims of this discussion are to identify the market environment we expect to be operating in this week, and to really arrive at assuming news neutrality. What's the most likely scenario? Highlight bullish and bearish risks. Always set the playback speed to 2x when I'm at the helm. You'll know why if you just watch one or two videos. And then we'll just have this quick review. I'm not even going into those lines there in blue because you've seen them before and you can read them now. But it actually worked out, I think, where there was some value there. And we were saying that we thought we would maybe get this sort of test of the lows and go a little further, but we sort of got a test of the prior low, but not the lowest lows that I was thinking. And I think we were on our way there until they got the setup combined with the Jensen commentary, and that's what had the final say. We're going to walk through that because I think that's very important. And hopefully some people that tend to get frustrated, maybe they'll be less frustrated, I think, after seeing this video. I hope anyway, at least some. Reminder that we've been talking about this since last fall, that there's tremendous, well, even beyond that, but we kind of made it a regular thing to mention that the XAU has tremendous big picture potential. You should go look at a monthly or quarterly chart over the last, say, 15 to 20 years, depending on what you're looking at, GLD, SLV, etc. And you'll see that there's, I think you'll see very clearly how much potential is in there. What that portends may not be pleasant. And as I'm sure a lot of you know, it may have started to get real. I put some long-term stuff in, hoping that, because I know from having traded in the metal space over the years, it can be really a tough spot to navigate, a tough area to navigate. And so I made some opportunities very long-term oriented, thinking that they'd pull the usual stunts that they have. And that's one thing that's very bankable. So the things I'm going to try to coin are, I've said this and people think this is, I guess, mildly amusing at least, but you have death. People always say, what are the things that are guaranteed? Death and taxes. But I added to that options losing their extrinsic value at expiration. That's another one we can count on almost all the time. And then the other one is that the gang will play games, especially in certain sectors of the market. And that one of the ones that's probably the most manipulated over the course of time, at least it has been gold, silver, other precious metals, the precious metals complex. And they did play some games for a while. They may still be playing games, but if that pattern really that's in there fires, given its longevity, given its height, and what that portends, it's pretty big stuff. So it's definitely worth a look, and it may have gotten real. Anyway, I can save everyone the time. If you just skip this, you might get something out of it. I hope you get something out of it. I did put some good time into it this morning, but I kind of feel like I'm just picking it up rather than just getting it taken care of on Friday when so many more things are fresh in my mind, what's left of my mind. Anyway, we all know, right? FOMC is going to probably dominate the outcome of this week. That reaction will probably dominate it. It's very hard to avoid that. So you all know that there's the commentary, the wording that they're going to use that's big, and then you're going to have most likely a strong squeeze that will be followed by a rollover. So the squeeze can be very strong and it can last for a while. I mean, it could last for days, it could last for weeks if that plays out. But this is from my recollection. So I've been through these over the years. Remember, I got started on the Philly floor in '92 as an options trader. Soon thereafter, and then anyway, I've been through these things quite a few times, and my recollection is that when these guys start to get the cuts they've been clamoring for, even though it really is more set up for sell-on news, if you think about it in just simple terms, they normally have this really strong squeeze that happens, even though they got what was expected. And then after they've taken out every last bear that stayed short through that initial cut announcement, or nearly every last bear, then they finally initiate the rug pull and you start having really significant sell-offs. Doesn't mean it has to happen. I'm just sharing that. That's been my recollection, which again is just my recollection. I don't have the data, so I can't really show you proof. Anyway, if not for the FOMC, and when you see short-term obese there, I mean, I would read that as 2 hour, 1 hour, 2 hour. It's not really serious obese. It's just, okay, would it be ideal if we had a little bit of a boring Monday morning and then start rallying again, maybe like 2:30, 3 o'clock? Yeah, it would. Just kind of take some of the short-term obese out. But, these guys never listen to my scenarios. A lot of you know that in terms of what they should do. They just do they often do what it looks like they're most likely to do, but not in the way that you expect. That's what always something that I try to remind folks of. Anyway, I would expect this market to work higher. If you said to me, no, not earnings season, no FOMC, no big news will come out, what do your charts tell you? I'd say the market goes higher. These stocks are poised to go higher. So having said that, let me just mention, though, that seasonality becomes an issue now, which makes it really interesting. You have all these problems that are out there, and you also have the fact that there's, as we see a little bit lower on one of our points, right? You kind of have this synchronous global easing coming up. That's a few more lines down. Basically, another cycle of the Ponzi. And so, with the kitchen sink comment, related to the current administration, which would be any current administration, by the way, they just wanted to keep everything right as pinned towards the highs or making new highs to gain support, right? People are in a better mood to support you if things are perceived to be going well economically, very, very, very simply, or financially. So that's, I think, often the game plan, but the calendar calls for problems. So on that note, I'm going to stop the share. We're going to probably have to come back to this because I'd like to just dive into let me pull this over here. I want to dive into my browser, so just please bear with me as let me just get the share going again. And where's that at? There, the screen for share, and I'll get my browser to show me what I want here. And I should have it already going, and yeah, I do. So fortunately for a change, I'm organized, at least to this extent. So here you have it, right? We've been tracking the seasonality now. We've been focusing on it more and more because we were coming into last year was a pre-election year. Calendar worked quite well. I would say very well, actually, just overall, and it's worked, I'd say, fairly well this year. Maybe not as good as last year, but still fairly well. But you could see that even in the years with no presidential election, SEP into is a tough spot for the market. Typically, with the presidential election years, it's a little tougher. It's even a little worse. So that's really where we are, and where that really starts to, I think, happen is middle of September. If I put my cursor there and I just move up, you'll see where we are, right? So we're kind of at a high. And it's actually a little bit lower of a high in presidential election years. It's actually a little bit lower of a high, or at least a similar high, it looks like, slightly, in non-presidential election years. But this is really where it gets rough. So if you look at this, just to kind of break away to that, we're at a slightly lower high right now on the diamonds. We're at a slightly lower high in the spiders, right? These are just slightly off. And so it's really very eerie in a way. So let's just note that it's a little eerie and you're down a little bit. But if you said to me, right, forget the presidential election year, forget the news, I still think this looks ready to go. But it's not out of the woods, because even on this chart, and I'll come back to this is going to be swinging around and coming back a lot, I think, today. But I'll draw the lines on this one. I don't know if I'll draw them on every single one, but this is probably, this and spiders are our main go-tos anyway, because I think people like that we chart those in the ETFs instead of the index itself, because they can take the levels and work with those levels. And I pulled the wrong line, my bad. Wanted to just get this line a little bit closer to here so it reflects it better. And then I'll put one more line in there. And I think you'll see that, you can see that this sort of has the triangle going on here in the Qs. I think that wedge, some people are going to call that a wedge. You could call it a triangle. As of right now, though, you're working off of a higher low and you're not really overbought. You're short-term overbought. Like I said, it would be great if they were smart, they would probably back it off early Monday morning and then start the rally into the close, kind of make things look a little rough on Monday morning and then turn it around late, then keep the turnaround going on Tuesday. And they wouldn't be anywhere near daily overbought, and they could really, run and gun right through this high in a session or two, maybe close this gap back here in the Qs, things like that. But you're not out of the woods, because I do respect patterns. We've got our colleague BMC. He's a very big pattern oriented guy. A lot of you know BMC, and I am too. I just don't feel comfortable relying on those alone. So I like to do other things. Everyone's got their way. I have a lot of respect for BMC. But I do, I like that he's pattern oriented, because I do think these things matter a lot, even though a lot of people don't believe in that. But let's do it on SPY. So this triangle looks a little different in SPY. I think this looks like more of an ascending triangle or wedge, whatever you want to go with, right? It's not perfect right now. I'll try to put a new fresh sort of like flattish line on it, just to give you an idea. And that'll be right there. Well, I think that's a flat. Well, it didn't. I thought I changed it and I didn't. My bad. Put it up there. And we should be right about there on that one. Oops, got a double click. There's that one. And then let me just get the rising support line added in here for us. And I wanted to do this way on purpose, where I didn't pre-draw everything. That was my hope. I just thought it would be maybe a little helpful for some people that are newer to this stuff. Let me get that position for us a little bit better. Still needed to be a little bit better. I'm willing to cut through that wick there. But anyway, I think if you see the long flat line, you have this, and you have the higher low, and you're right there. And again, I think you're just a little short-term overbought in terms of maybe like your 1 hour, your 2 hour type of thing. But it's really not that bad. And your daily is certainly not really that overbought as well. But that, to me, is a little more constructive, because it's working its way towards the apex of the triangle. Usually when you get about 3/4 of the way into the triangle, that's about, and what I'll try to do is just recolor these things so they really stick out better for people that are new. Let me make that let's just make it an easy color like this one so that it sticks out. And I'll make this the same. And then you can maybe see it better. But there's the triangle I'm talking about if you were having a hard time seeing it. And so usually when you're 3/4 of the way in, this is considered from my research work that I've done over the years, kind of like confirmed that most of the time you're going to break out when you're about 3/4 of the way there. You can be on breakout watch or breakdown watch anytime. Of course, a lot of you know the assumption with the ascending triangle is that it's bullish, just by the way that it traces out by its construction. That essentially the buyers are becoming more aggressive within this consolidation because they're willing to step in and buy at higher prices. But I wanted to use this also, and I might be covering some points, but I'm going to do it while I'm here. That's why this is really sort of like a stream of consciousness approach that I end up doing. But the reason is, right, this is really big. So my thoughts were that news neutral, which was hard because of Apple, and we had the NVIDIA CEO commenting, and the lead up to FOMC, you just don't know what's going to hit. I think there were also there's plenty of economic data we had last week, but they had this little like, oh, we got a little overdone there on Friday. That's Friday. Then they come in, kind of hold things, but then that starts really, they try to open this thing up about there. Then, right, there's problems and you're on your way lower. And the support line, I'm sorry, this blue line I just made blue, we had that as a resistance line coming into the week. And we said if it gets through there, that's where we'd literally look to see it break out, I'm pretty sure. And so it started to break out. It was looking good, but this really then fell back down, and it fell below that breakout line. And some people might say, well, who cares if it's below the line? Well, I do, because I've worked with this stuff and seen that this is relevant. So this had me starting to get worried that there'd be a problem here potentially, because this really should have done, in my mind, if they're going to rally this, they should have been able to do more than this. Just get a 2-day little sort of erasure of Friday's candle. They should be able to do more with that. Typically, if you're really in a bullish market that wants to act bullishly, and when it started to really make new lows for the week and was challenging the prior week's lows, I think we talked about the 100 last week. I thought, well, this could break down. This is not looking good, and I think a lot of people would say that the same thing, right? To do this kind of iterative charting style that I like to do. You're willing to react, you're trying to be nimble. This becomes a problem. Now you could say, well, I need to see it crack here. What's the point of cracking Friday's low if the 100's waiting for it? So probably realistically, you would have to wait for the 100, because if you believe in SMAs being areas of support and resistance, and I do, and you also fibs right near there, which you can see, do you really want to sell right above support? Right? That's the question I think you need to be. This is why I'm going through this. This is really for people that are newer, or just to share with people the way that I like to think about things. So do we really want to sell right above support, which is in two forms at the very least right here? And my answer is no, I wouldn't. So if people were to say, well, Wayne, let's say I put a new SPY bearish idea in UOA Pro, I would not really, if I did pick this low so people could get in if they really wanted to, I would try to put those warnings in, like, hey, there's two forms of support that are right there, just below here. That's the problem with this trigger. If you want to be a little more conservative, right, I would wait this out, and you need to see this thing really breaking down. Of course, the reminder would be you always have breakdown risk. But things, right, this was sort of a little bit of a reflexive bounce. It starts deteriorating quickly. They're on the ropes. This is looking like we could get the retest of this level, and that's where the whole potential got thwarted, because that's when they shanghaied everybody. I think they had everybody thinking there's potential problems here. We're breaking down here. This is, they were maybe a little too aggressive. And then you all know what happened thereafter. And this is why I'm going through this, because if people are new, this goes to one of our bullet points. You've got to realize that the worst thing you can do, even if you're super frustrated, and I know it can be super frustrating, the worst thing you could do is allow that frustration to take you out of your position management discipline. Because this is what happens when they get people seeing very obvious things, and a lot of people are saying, oh no, this is looking really bad, and they're able to reverse that hard. They just often do not let up. And a lot of longtime listeners, which I know Ben and Marianne are faithful viewers week in, week out. You would probably agree with that. You've heard me say it many times. So this is what I'm trying to help with, and I tried to help with this at a few webinars towards the later half of the week, because new people, I should say people new to the market are often very frustrated. I completely get that, but this is how quickly it can change on the dime. In fact, a lot of the ideas that I put in before this really gained steam, I'll show, well, I may as well show that now because we're stumbling onto that part of the discussion. So this is a little bit of a jump ahead, but I want everyone to see how this week started off, right? So we started off on in UOA Pro, which is where I spend most of my time. I help on the other services, but they're more news. Most of those are newsletter style rather than an ongoing service, right? That can issue ideas at any time, right? Or updates at any time. That's UOA Pro is more intensive that way. And you can see that on the first day of the week, we had some bullish ideas, right? But you could also see that we had bearish. So the ratio was, I think, 4-3 of new ideas. There are other updates in there, but I'm just looking at new ideas, right? So the point too is that I try to keep balance in here, right? Because if you're a believer in my overall philosophy I subscribe to, which is basically, right, we want to be ready to take trades in either direction if we can be. And where there's good opportunities, like where there's UOA, there's a good technical setup, or if there could be a really strong setup failure that reverses hard, much like we talked about in last week's video, where once a pattern fails to fire, if you're waiting around and you're trying to front run the pattern firing, like we had with the inverted head and shoulders with the dunce cap and the spy, and then they rug pull you, like you've got to react right away and just get out and stick with your discipline, because it can be very painful. They can make it very painful relentingly, and they don't give you a chance. It's definitely cutthroat, take no prisoners type of a thing. But you're kind of balanced to start the week. If you look through the day two, right, you can see that we were still got a few bears in there. It started shifting more towards the bulls, okay? But then I was still able to get a few bears in hopes of keeping things getting set up for what could happen in either direction. But notice what happens after this cat entry. Just start looking at all these new ideas of what happened. And I'll just scroll up. They're all bullish, as you can see. Right? You get, I think over the next, from that point on, you had one idea that was bearish that I had to, like, just to get something to cling to. Because like I said, you never know what can happen, especially if you're me and you believe that we're really in a window. It's probably one of the easier, which scares me a little, but it's one of the easier times in my whole career to forecast that I think there's going to be some news hits that really could potentially either jam or slam this market, one way or the other, or both. So, but you can see it starts to become very dominant for the bull side with all the ideas that go in. And that's because, well, the basic philosophy is that the way we trade UOA, and there's a lot of ways to do it, but the way we trade it is essentially, right, we want to see what we think could be opportunistic UOA hits activity. We prefer if it's shorter term in nature. We prefer that if it's very significantly large, but really, we really at the very least just want to see there's UOA and there looks like a potentially good technical setup developing within a market that would probably favor it ideally. But again, knowing the market can shift, you've also got to add ideas in, even if you don't think at that moment in time they're going to trigger. So you have to say, well, this could be interesting if it drops below here. Someone seems to be placing some money that suggests that maybe they think it could. Let's get ready for that scenario in case it does develop. But you can just see the character. The whole point, though, for this is that the character of the whole week changed once Jensen made those comments. And I think that's what's important is you could say, well, is it unsane to start buying material stocks like Freeport McMoran because Jensen said something positive about his space? And of course it doesn't seem very sane, but you're in a market that goes risk on, risk off, right? And the way to show that, well, one way to show that is this. If I bring this in, if we look, we're not doing a lot on sectors this week, but look at this, right? Like when you look at it, you can see that it might be tough if you're on a smaller screen, but you can just see that of the 12 main sectors we typically flash each week, they got their hands on most of them. Look how some of these things ended the week. You can just see that they shot right back up from that point on. So, I mean, you've got these XLB and XLI, which got punished and were on their way to getting smoked. Look, let's just show those and just in better detail. Look how they strongly reversed it off of those long wick candles. So this, I know for folks that are experienced, that what I'm spending time on here, but I'm trying to help people that are newer that this is why when you hear us talk about discipline, we're serious. Like it's not just like, well, the authorities, you better mention discipline a lot because the authorities are going to be on you if you don't or something. No, we really believe you've got to be disciplined because they will just take you out on a stretcher if you don't react when things go off the rails, which is why I think some of the most important things you can learn are how to play defense, defensive tactics. What do I do? How do I do it? What's smart ways for me to if I've got this trade on, what's a smart way for me to get defensive or at least neutralize my risk for now? So everyone knows I'm a stickler for that because I feel like that's the difference maker, between people that just take a shot and people that are aggressively managing risk, which is what professional traders do at times for sure. So anyway, you can see how they shot so many things up here. And they got the market right back on, and it was in many sectors it was unrelenting, right? You have a new high in real estate, all these things. So if you're scratching your head saying how's any of this possible, it just right again. This goes back to my argument of they got a lot of people off sides in the charts. A lot of people probably thought this thing's not looking good here. This is really bad. And when so many people kind of envision the breakdown and support hasn't even cracked, and then they get comments they can run with, and the financial press is only too happy to carry water for them, they'll come up with whatever reason, but that's what happened. And again, you could say, well, it makes no sense, but we're not in this to have things make sense. We're in this to profit and help our families out. That's what we're in this for, right? To have success. So it doesn't really matter if you're new, forget about that. This is stupid. I get it. I'm probably with you. I just know what's even more stupid is not being willing to manage my risk, because after a few drubbings, right, you could work your butt off to do very well. And if you mishandle a few things really poorly, they'll really clean you out. This is exactly what I've seen time and time again with so many people. They kind of become complacent, which is why complacency is discussed in the market. Okay, so that's a lot of sidebar stuff, but it was part of my plan to talk about it here. So let's go back to some comments, and I'll kind of keep weaving things in. So I think I've got all that stuff covered. I do think the calendar impact is back on. Like I did show that calendar. Let me just pull it back up for everybody. It's right here. And I think you're really getting into this VIX sweet spot. You're also getting into, right, when the calendar could really start to flub things up for this market, or I should say typically flubs things up for the market. So that's the kind of my counterbalance to the charts look really pretty good on balance, if you ask me. I've got to mention that I've also got to mention clearly that none of this matters except for the FOMC, right? Because they're going to probably hang their hat on that. They could maybe rally into it and then squeeze a little bit and then rug pull. They could maybe tread water. then jam, 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 right? And then maybe even finish the week strongly, then rug pull. There's so many things that, right, could happen. We can't go through them all. So, but right, that's really it right there. Here is just to kind of go more with this. What happened there? That's strange. What happened to my chart of the day, VIX seasonality? Let's see. Yeah, so this is just not the perfect look, but at least I was able to find this, right? And you can see that this is typically what happens to the VIX anyway, right? You reach the high point sort of in early to mid oct, and you get up there. So that's about between now and a month from now, let's say. So this is really the window. And if you want to know if that's real, this is some research right here, and you can see that the last 8 presidential elections, you end up where there's a little bit of a bump, right? In other words, you're up. So more importantly, in each election year, the VIX surged. Look at this one. The VIX surged from September to October, increasing by an average of 25% over the years. So in other years, the VIX fell over that period. So we're in the election year sweet spot for the VIX is the whole point. That's all I'm really trying to establish. So that's why it's a tough video this week. I'm going to go through it all, but it's a tough video because we've got great looking charts overall, or at least very good looking charts overall, and you're not even overbought really. And I looked at AAII. This is another bullet point here, right? I'll try to pull that over real quick. But I looked at AAII, I looked at CNN, and they're neutral. These are neutral, right? So the VIX, so they're neutral, VIX sweet spot here, and then I've got this lunar assistant. If you're wondering, this is probably where Ben and Marianne really start laughing. Oh, I can't believe this guy's bringing in lunar stuff. But I'm going to show you the lunar stuff. Here's the lunar stuff. So you've got your full moon coming in. Why is it giving me 23? Here we are on the 15th, as you all know now. Right there, smack dab, you're going to be in the full moon window, right? So the research that I've seen is that you tend to get underperformance around full moons. And believe it or not, you get better performance out of a new moon. So, you can laugh at that all you want. I think the emergency room phenomenon has been that's been proven. It seems to be at least I did see a study on it. I shouldn't say proven. I've seen a study that seemed to confirm that. And then anecdotally, anytime I meet anyone that works in an ER, they always seem to confirm it. I've never heard one person say we never noticed a difference. So I don't know why this matters, but it does. But just so keep that in mind, right? And I'll show you one more thing on that. But here is, oops, it jumped over. There's October. And so, right, the October full moon sort of window, it really kind of ends. It really ends just a little bit after the midpoint of the month. And that's when, right, the worst of the situation, in other words, the poor performance from a lunar perspective should end. So that it all sort of fits, which is a little scary that it fits that well. But the final thing I'm going to show you is actually this. And you can start to laugh about this, but this is a paper that, where's this paper at? Magnitude of the return difference is 3 to 5% per annum based on the analysis of 2 global portfolios. So the findings indicate that stock returns are lower on the days around a full moon than on the days around a new moon. So you can take it for what it's worth. You can read this paper if you want, whatever you want to do. I'm just trying to be helpful. That's it. And I'm just trying to paint a picture of, right, if you take away a lot of things, like I said, if you just get away from the moon, you get away from the VIX seasonality, you get away from any news, you remove the FOMC, I would tell you that market goes higher. I mean, if you told me that, I would say more than likely market goes higher. But it's a lot more of tough call. If you believe in any of the stuff I've already covered, then you kind of see that this was already a tougher call to make. So I just wanted to make that point for you because, like I said, I could save you the time. I'm still going to cover things, but it is what it is. So let's make sure we go through everything. I think there's a rolling complacency. I know I've covered these other things already. So I know there's a rolling complacency. I shouldn't say know it. I sense there's a rolling complacency. I don't think it's really seen though right now. I think it's just there's a little bit kind of the Buffett situation. Um, Jensen actually selling shares. Someone might say, well, he only sold 80 million dollars worth or whatever it was, but there's just been some little things like that, and there's just the sense that I have is just that no one really appreciates the kind of risk in a big way that I see from most. I should say not no one, but most commentators. I think the risk is really high. I think it's the scary part to me though about that is that it's just too obvious that it's very high. So that's what's got me like worried. Well, wait a minute, like it's too easy to be worried about it. Again, we're going to have to trade the charts that and market in front of us like we always do. So it doesn't really matter. We're just trying to provide this background information so that we're not caught off guard. We're prepared, right? We go in there, we appreciate the risk. If it doesn't, it would be great if none of these concerns that a lot of people like me have that are out there. And I just don't believe, I just think the lying and is so thick about everything. And the talking my book has got it's almost just gotten to the point of where yeah, I struggle to see where it can go from here because it's all it seems like everything's so gamed and everyone's just engaging in games playing, and it just how does that end well? When everything seems like it's impacted by some level of fraud or obfuscation or whatever you want to call it, right? Things are being hidden. Anyway, sector and market breadth came roaring back. Let's show that we're on that one. So I think that one is here. And again, a lot of you have seen this just simple stuff, but you can see we're getting surges of new highs. That's what the first two subgraphs are down here. You can see the McClellan oscillator came roaring back. You can see the volume index, cumulative volume index came roaring back. Comparison line, right, of stocks above certain moving averages, be it the 50, the 100, the 200, that came roaring back. And your advanced decliners and cumulative advanced decliners, these are roaring back. So was there real punishing? Yeah, it was really happening. But again, right, they really came after things. So you add that together with the fact that they got really good participation out of the sectors as we saw. And let's just go on to note that with respect to these sectors, right, even XLE started to finally work a little bit towards the end of the week. I don't know if there's any staying power. I mean, overall, we know the trend is down still. They might have gotten ahead of themselves on a few things in this market too. But overall, as I said before, they marched virtually everything back to a degree. So this is definitely risk back on. The one exception I think is XLF. It was still in more of a corrective phase. This is just it stopped going down and it did move up. But as you can see, almost everything else, they kind of rallied decently from the week's lows. Really almost everything else. And even those that are decently off the week's lows. So I don't think they look great, but they still are. I mean, the incoming trend here is at least up. This is a bigger struggle. But again, you have to remember that you've got this supposedly synchronous global easing cycle coming in. We can see, right, what the expectations are once the ease. I think a lot of these people have front run the easing that we're about to see. But that's part of my problem with what's happening here is that I think these people priced in a little too much. But the mega caps, let's cover those. Oh yeah, so the Jensen thing, right? So that's why I went into that depth. I just wanted to say that, right? This was looking bleak. You could really see the turnaround. I don't think I might even try to just quickly show that just to show you what I mean, where that's not it. I got to go to unusual. Let's see if there was something early that I might have written. Um, maybe let's see if it was in like an upstart idea. Let's see. I was pressed for time. Um, oh, okay. I wrote on that one. I wrote gang has save underway. Want to be ready with bulls in case they're successful yet again. So at this point, things were still struggling, but I was already thinking, hey, they might be able to pull this. Oops, they might be able to pull this save off. And I clicked the wrong thing. My bad. Let's go back to that. UOA Pro. So that was my thought really before the sectors were still struggling, as you can see in that comment there. Let me get the update type new. We'll go back to where we were, get back to upstart, and that was should have been this day here. Let's see what I said in Amazon. Okay, there it is. So the gang has spent 30. I'll highlight this part. The gang has spent the past 30 minutes punishing aggressive shorts and flushing out weak-handed longs after dropping below key trend lines. Now we may get to see if this save has staying power or was just intraday business as usual for the gang. Markets were really under pressure and should be on the cusp of risking much more downside only 30 minutes to go. Sectors showing across the board weakness at that point. However, have to prep where we can on both sides as we can never be sure what the gang has up their sleeves. Amazon not looking great today, but it did bounce off the 20. And as we all know, things have a funny way of changing unexpectedly at times. Issue here is a few other SMAs to the north of today's high, but for the record, there's a possible higher low in place on the daily, and they may be able to get to work with if they froth this market on the way to the FOMC. So I was already thinking, they've got the FOMC to work with. This might be a Shanghaiing type of. I even think I may have used Shanghaiing as an expression. Why is that? Why is it doing that to me? I'm surprised it won't. Well, I guess it wants me to use return to trade log, but I'll take one more shot for us just to see if anything came up, just to kind of show, knowing just what they're capable of. Having watched these guys operate for so long, this is why I'm telling you got to be disciplined and respect this. I don't know. I'll take a shot at IBM. Maybe I added something like that there. Okay, yeah, this is a little bit more. I'm not going to go through everything. You could see Jensen. Um, the gang seems to be using shockingly positive comments throughout the entire market from the edge of the abyss. This is what I mean. The suck in maneuver the gang is trying to pull off could continue to be a powerful one. Right. So just remember this is all happening right in as close as I can get it to real time. It obviously takes me a little time to formulate these ideas after I see the EOA. Normally, right, if you're just a trader, you see the EOA, you take a look at what you like to see, and then you go ahead and you put your trade on, right? You formulate your trade, you put it on. But I have to explain, ideally, I have to explain a little bit to people that are trying to not only make money from the service, but learn something from someone that just has spent a lot of time doing this. So that's what I spend my time doing if I can. Sometimes the paper and the action is so fast and furious that I can't get to it. But I said IBM has been strong despite market volatility. So it's possible that if the goosing is just getting started, this could jam into new highs. And, this is not a pat on the back exercise, but I'm just telling you, why would I spend the time writing all that when the stock was still at 207, right? Why would you spend all this time thinking that this in the market could jam maybe to new highs? They still may. I mean, the market didn't quite get there, but I just know from what they've done so many times. I've literally watched them do it. This is really like a lot of the scenes in Lord of the Rings trilogy where it looks really bleak. It looks like it's over. And the filmmakers, of course, know to create that emotion. They've got to make it look really bleak so that when the turn happens, right, there's a dramatic impact for the audience. And that's essentially right what happens with the gang. And and that's really a similar thing, right? Psychologically, when you watch a film and you're enthralled by the film or something, it pulls you in. That's what you're like, getting this roller coaster ride out of this action adventure type movie, that kind of thing, thrills. But the gang uses similar techniques, and but if you don't go for the ride the other way, they've got you in big trouble, right? So they're basically setting psychological traps for people who are not don't who do I should say who don't appreciate to that point exactly how nimble you have to be at times in a market. And I'm not even, by the way, I'm not trying to make this seem like it's easy. I don't find it easy. I'm not that bright, but I don't find it easy 30 something years later. I'm just trying to explain that if you're new, you've got to understand a lot of these things, or the reason people think that the reason why a lot of people don't make it as traders, or most people don't make it as traders, is because, oh, they're just not smart. They don't have the aptitude. I'm the genius. I do, right? That's the professional trader mentality. But in a lot of cases, I think what happens is there's a lot of smart people that try to do it. They get frustrated, and they quit. Or there's a lot of smart people that get started and they end up quitting because they got their clocks cleaned and they're thinking, well, that doesn't even make it. It's a sucker's game. But what it really is those people just didn't stick around long enough to learn what they do. Right? That's the hardest thing if you're on a limited, bankroll like most people are, and you have limited time. That's why the part timer with limited funds, limited education, limited experience has such an uphill battle. It's not about making sense out of things, right? It's just knowing their proclivities and how they basically rescue victory for themselves from the jaws of defeat and things like that, time and time again. And it's just not a coincidence. There's no way that in so many cases, right, that the market is really on the edge of the abyss or the precipice, whatever you want to call it. And then suddenly, right, news breaks and these guys are running with it. They have it set up that way, right? They knew that Jensen was speaking at that I think it was Goldman Sachs, at that Goldman Sachs tech conference or whatever it was. Everyone knew that, and that's the news they hung their hat on to be able to say, you guys, hey, this is what happened, and got the squeeze started, and the squeeze then takes on a life of its own. I've done a lot of talking, but I'm just, like I said, this is really this week because I'm going to go through charts still even more, but the problem is that a lot of it won't matter in retrospect, is my guess. Right? It really won't matter because whatever the FOMC wording is in their plans, that's what they're going to react to. And what they do with that is tough to say. Like I said, my recollection is initially there's a squeeze and then we see what happens from there. We talked about that was the Shanghaiing. I wrote it somewhere, but not in those write-ups I showed. But that was the Shanghaiing effect because they had everyone hung out to dry on the short side, and then they mercilessly crush them like they always do. Anyway, we talked about that. This is getting more serious. The XAU. So a lot of you probably remember I said I was getting involved in GDXJ and stuff like that. I'm already long a lot of stuff in this space, but I'm not fully long everything. So I was looking at, what can I add? What can I do? And I added GDXJ, and I was really mad because I was so busy. And once again, I get busy. I couldn't even look at alerts that came up to make adjustments to my position. And I can't complain. It's another week where like you're like, oh, well, you made a lot of money and relative to how much you had at risk. What are you complaining about? But my adjustments just were not ideal because things already jammed right through my short strike because the movement was so strong before I could get to them. So anyway, XAU, this you can see the week that this thing had, and this is where we have to go a little bit more bigger picture. I'm just going to go way out here to monthly, and you can sort of see that there's this kind of strange, kind of weird sort of cup and handle that goes back way, way back. It doesn't really look identical to a cup and handle, but it has, I would say, cup and handle characteristics associated with it. It looks on the GLD chart, it looks, well, it won't go all the way back. Well, there it does, finally going all the way back. But this is sort of the top of the cup right there on where I'm at on that line. You can see the cup in here. You can see this really extended handle, and you're just launching from this pattern. And like we've said for a long time, where does this thing go to if it does launch? And it goes up a lot. That's the simple answer, right? You probably launch and you go up. I would say probably 270 is a number. Now that's not a fib on here yet, but I think 270-ish is a natural, roughly speaking, right? That's a natural area. I'm not saying, of course, I never say anything's a lock, is a short-term stretch, but you can just see that this thing is, it is overbought. And it's even overbought on a monthly basis, right? So you've got to be a little bit careful here. But I still think the times that we're in are going to trump that, because I do think there's reasons why this is happening. But I'm hoping we're going to see more paper in there. We have had a few ideas. I'm sort of surprised at how little it's been, because there have been other really active times where the complex got on its horse and started to run, and we had really good paper. I don't know what's up with this, but it seems like the paper just it's been a little bit here and there, not as strong as I would have thought. But you can see, right, this thing really is firing. Maybe these are guys are right. Maybe we're going to get the back. There's going to be a backup, maybe, right? And then you get this sort of initial pop through the top of the cup, and then you go through, and then you get a pullback of some degree, and then you get to that next leg, and that's when it gets really big and powerful. But I don't want to get too far. That's not what this video is really about. But just want to kind of reiterate that. And like I said, GDXJ is one area that I got involved in. I'm still in here small. I did roll my short calls up to the 51 strike because it got to 49 on me so quickly. I had some settings that were in place for automation, but unfortunately those settings they were met, but the market, I couldn't get the transaction done in the market at the time. It was just one of those things where the market's, probably because this day was so powerful and call sellers were so probably getting ran over, that it was hard to the markets. In other words, the markets widened on me. Bottom line is the markets just widened up on me, and I couldn't get my automated adjustment done. Anyway, let's keep going. So I've gone through all this. That may be getting more serious. I think I'll show this. I'm just going to pull this down in the interest of time. But you can see over here, the TNX and DXY, they were both smoked. As we've said, right, those things getting smoked, that usually helps the situation, which it did, and what happens now, I mean, they're nearing key lows. And if they plunge below there, you would think, right, that would typically be a good situation for equities. But again, we have all these other factors we've already mentioned. The VIX, though, I'm going to talk about, because the VIX, we have a situation where this finally came in. So I was frustrated, as you'll remember, because I got so busy I could not deal with what happened the prior week. They just shot things up on me, and I didn't have a chance to get in at cheaper levels the way that I wanted to. It was one of those kind of deals back in here. So I'm glad that it's coming back into here. I do plan to do some more work in the VIX and a lot of other things, as I mentioned. So I don't care what the chart looks like right now. This, to me, is not really about that. It's really more about the asymmetrical side of things. And all I mean by that is that, yes, I know that I can lose, the VIX can drop, but if some of these news events, that there's all kinds of things going on with globally, this insanity of trying to stoke war with the Russians, the insanity of trying to stoke war with in Iran, all the rest of this stuff that's out there. I just don't have a good feeling about this, and I have the sense that, again, I've been saying it since July, that this window we're coming up for the next 2 months to me is very concerning. So I'm just going to leave it at that for now. But yeah, so I'm sticking with my plan. I've got to. I hope I don't get too busy. I've got to get some downside, more downside, put butterfly type things in place, and etc. We've already covered the lunar assist. Again, just a reminder, these issues are out there. Everyone, to me, I always say it, overdo it, but most people to me are just not really focusing on how risky this whole situation is, which that's just part of my complacency argument. I just continue to see, on balance, not anything particular, but on balance, I just keep seeing negative stuff, right? And really key things like autos, home buying, credit cards, debt levels versus savings, jobs losses, manufacturing data. I just think it's negative on balance. And I think without all the liquidity that they've pumped into the market this year through the Treasury, there's no way in hell that this market would be where it is. But we know, we're not the first people to notice that or bandy it about. But as a lot of we've been saying for a long time, more liquidity usually means higher equity prices. And that's what you get. That just finds its way into the stock market. So yeah, I'd stick with our mentality of roll, roll, roll. Reasons are, if you go up, I still have the concerns there. If you go down, all hell will be breaking loose and things can get really volatile, right? Because remember, any administration would not want the market crashing right in front of the election, right? There's just no way. So, we know that there's a possibility there's going to be intervention. It won't be probably described as intervention, but we've seen it before. And when they finally intervene, it can be very powerful and they can annihilate shorts if you overstayed your welcome. But if you're someone that rolled, right, you are still happy because even though you may have lost on your last roll before you got out, you still did very well to the point at which you got that third roll done, or more, maybe fourth or fifth roll. So yeah, so I'm kind of free rolling a little bit still in the VIX. And I did mention that, and I did mention other strategies already. So yeah, I'm going to be doing a bunch of things. That's the plan again. And I just, again, hope that I'm not too busy. That's what happens to me a lot though. I get too busy and then I can't really get done what I want to, because I have to prioritize things that way, of course. The long-term incoming trend is this market is still up. You do have very short-term overboughtness, meaning that your lesser charts on the intradays, you've got your 30 minutes, your 1 hour, your 2 hour. Those are flashing some things here and there, but the dailies really aren't that overdone, at all. So there's still plenty of room there. And I said it, I say it a couple of ways, but the gang pushes stocks higher, but reckoning time is upon us. So if you ask me, again, that's my bottom line. We go higher. Without all these other problems, we go higher. But that's the problem. We are at a reckoning time, potentially. I still think you should be prepared for volatility in both directions. Window of time is something I already mentioned, and I do think it's going to be largely what would be considered unexpected news by many. That's the next 2 months. The thing is, mega caps SMH fire higher, right? So I think that's another thing. I think news is required to derail the market. And the reason why it says no news derail with 3 asterisks is because if this market starts to get derailed without there being some pretty negative news that you think, well, I can see why the market's getting sold off now, and you can't figure it out, that's probably worse. In this next 2 months, excuse me, this kind of no news is derailing the market. No one can seem to find out why or figure out why. Initially, like, you've got anchors scrambling to put some kind of a reason forward for why this market's down 4 or 5% or something like that. Should that happen, that is going to, I think, be worse. So if you know what I mean, you know what I mean. There's going to be geopol type stuff or major domestic type stuff that we don't really want. Remember, this is more what I'm saying. I still think the risks are underappreciated. I do think soft landing that they usually sell to I want to believers. That's what everyone wants to hear, right? Everybody that's got their 401k type thing, most of those folks want to hear, soft landing, soft landing. So they sell them, right? They sell them what they want. But in most cases, you end up with hard landings. I forget who said it, but they said, there really never has been a soft landing. That might be an overstatement, but you get the idea. I'm still at DEFCON 1. The reason why is the news, not because the markets. Usually we're only at DEFCON 1 if the markets are really not too far from a critical technical inflection point where if it breaks below a certain level, it really could trigger really serious technical selling and then some. But we're not really near that right now. But the reason why is due to this news window. So just going to reiterate that. Esther House warning, everyone understands what that means. That it's part of the services. It just means that be careful out there. And I still think that this is it. This kind of stuff can happen at any time. And I'm leaving a lot of things out. So let's go back and look at the major index ETFs and wrap things up. So the first thing I'm going to do is take a look at SMH. And before I forget to do this, I want to look at SMH and the mega caps. So I think it's clear to me that at least that this is really one of the very key areas that holds the keys to the market, right? Of what this market does. And so this is why when we were discussing it later in the week, I'm saying that, this is a betwixt and between situation, because on the one hand, you've got this low, you've got a higher low, right? And this leadership area is dramatically lagging behind the market and dramatically removed from its all-time high, right? So it's got the higher low in place now. It's got this intermediate high here, which it could easily eclipse. And then that's really only going to leave these highs up here. So this could be right back in the saddle again. It's got a gap to fill up here if it does start to ramble and rumble higher. And it would really be above all SMAs quite easily with one decent session. It could have all the SMAs to the south, because it'll be at that point it would be above the 50 and the 100. Excuse me. So easily this could flip, but I think you have to really keep your eye on this right now, because if this doesn't flip, that's a lot like maybe what we discussed a few weeks ago, where is there information in the fact that this is not going, right? Is that really like is this boring, not non-participation? No one's trading it as the daily day trading vehicle at that point because it's not acting well. Is that really the sort of off the radar or reduced radar effect, right? For most people, oh, SMH is not doing much. Is that really the signal? That's when I'm starting to wonder a little bit more if this thing doesn't start to get with the program and get marching higher, right? And you would say, well, what's it need to do? Well, one thing it needs to march higher is obviously, right, NVIDIA needs to march higher. And look at that, right? There's hesitation even there. This is after, Jensen made the sliced bread type comments. So this is very similar, obviously, to SMH. Is exactly what we'd expect. I mean, very similar. I don't have the correlation number down here, but you can see that it's pretty correlated visually anyway. So I'm sure the correlation reading would be pretty high. But anyway, the point is, right, this is looking a little bit better. It's above the 20 and 50 respectively there. Everything else is, all the SMAs are to the south, but right, it's still well below this intermediate high. There's the two higher highs back here. If this ignites, it certainly helps. It's got the same kind of profile with the higher low in place. And it's not, it's just not overdone. But it's a little like, I wonder why that didn't go a little more. We had an idea in there, and it might have people might have gotten like, a single, maybe somebody was able to stretch it into a double. And I don't mean that as like doubling their money. I mean just baseball jargon. But it wasn't like it really did as well as other stocks that we saw that really ran. Some things really ran. I think we had Avgo as our main name in one of the services. It may have been Rebel Pit Pro, actually, that we we were debating on different characteristics and measures, which would be the better stock to go with. Sometimes, right, we include that the second the stock that finishes second in our weightings as one of our bonus names for the week. But and then we get frustrated because maybe your main name did pretty well, but the bonus name that you didn't make your main name does far better. Well, in this case, if you want to call it a coin flip figuratively, the coin flip actually worked in our favor. It seems like you always remember the ones that where you got it wrong on your final determination, but we were like Avgo, or I think it was Avgo or AMD, or all some of the major semis basically, and we picked Avgo. But that, you can see, that did far better. That did far better than NVIDIA. And now remember that the interesting thing is that Jensen really, we probably couldn't have gone wrong with any of them because they all kind of had a decent week. But luckily, Avgo is clearly the big player, the big winner there, I think. But Jensen says what he says, and you might be able to argue that out of AMD, AVGO, and NVIDIA, that it really had probably the most lackluster week of them all. Not that it didn't have a good week. It just didn't have the great week that other things did. So there's that, right? So I think you got to keep your eye on that. I want to look at these megas now, and you'll see, right, that this is, I think in these megas, I don't want to mess myself up here. Let me do NVDA, and let me do Netflix. Let me do Tesla. So there's these megas coming up, and you can see, I think these look pretty good, right? Like if you look at this as a package, they look pretty good, right? You get this corrective action. It's pretty severe. You get the strong bounce, which was sort of ridiculous. You get a pretty decent pullback that's respectable and takes the overdoneness out of it. And they start marching it back, and they're within a stone's throw of taking out this high. So, to me, right, this really looks like more of a continuation type of consolidation, that the trend continues. But you can't really say that yet. Again, this is more betwixt and between comments that we were talking about at the end of the week, because you haven't really exceeded this high, right? If you exceed the high, you probably have to think odds on that you exceed the high, you close above there, you're not dramatically overbought. Let's add those qualifiers, that you probably take a run at these highs, right? That would be my way of trading, assuming that the rest of the market's looking good. There's no really tremendously worrisome news. I would be like, okay, this thing's completely erased, this whole thing, and it looks like it's going to try to keep going. But again, you got to take your overboughtness into account, blah, 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 blah. So, but overall, right, you're really looking like this thing's wanting to maybe extend and have another leg at this point. But you got to be on guard if this gets short-circuited. This gets short-circuited here, and we don't really push and make new highs. You get this lower high in here. Then, remember to draw and maybe modify this line. This is probably the most aggressive support line we can draw. That's what I like to do. And it's not a perfect line, but you get the idea. I'm just going to leave it there for now, just to make, in the interest of time. But yeah, you do something like that. You say, okay, this is it. Clearly, you could pull flat lines in that we have, or some other things if you want to. But you would say, right, if this tries to come up here and fails, now the first thing would be, if it falls below this line, it could be the start of a reversal. If you say, well, no, you could say, no, I'm going to use the close here, right? That's going to be what I'm waiting for. But you've got to pick a point you're trading against, as Ryan always reminds everyone. And that's the point at which, right, you can say, okay, I'm trading against this high, or this high plus a buffer, whatever you want to do. But if you want to pick if you want to pick a fight with it. But I'm just saying, if you're really aggressive and you want to just use it for position management, if you start out and you start looking okay, and then they start reversing it below there, it is not the end of the world. But I think you have to get a little bit more defensive in the way you're handling things if you start to see this whole package falter, because, right, it seems primed to go. B, these are massive weightings, as we all know, which is why we look at these. These really dominate a lot of the market, and there's a lot of stocks that tend to follow along with these on top of it. These are almost like drivers. A lot of them are driver stocks that sort of feed into other ecosystems or feed into other stock type other action. So I think that's what you've got to be on the lookout for. Let's go and just wrap up with SPY and the major four. This to me looks, again, pretty good to go. And you can see that triangle. And I don't think you're overdone right now. I think overall, this looks pretty good. And you're probably looking, let me try to get my stuff up so I can, if I need to flash a number at everybody, will have it. So yeah, like you're right now, you're at like 69 on the 1 hour. So that's what I mean by just a little bit of short-term overboughtness, or very short-term overbought, but not really in the great scheme. You're only at 59 on your your daily, right? So you've got room to go. You've got the higher low. You should be able to punch through, right? If you're really in, to me, this should punch through. Again, that remember, all these are made in light of all the earlier comments, which are that this is going to be a tough week because of FOMC. You could get the droll deliberation. We're ready to commit until that we hear from Papa Powell. You could also get the front running. Oh, we're going to run this thing because they're going to cut, and this is going to be great for the economy. That could trigger a squeeze. You could get that. You could even, I guess, you could even get a pullback, right? So we really can't get too committal. We've seen different scenarios play out, but the two that we see the most are front run the cut, and don't do very much until you get the cut, and then just it's all hell breaks loose on the squeezing usually, but doesn't have to be that way. But yeah, I think that's what you do right now. If you remain close to this 20-day here in light blue, that's probably what you want to look at. I mean, that 555, 554 it's probably what you want to look at right about there for a problem area, and that would say, okay, maybe that starts to bring you lower. Just remember though that these SMAs do tend to work as sort of like air brakes sometimes on the way down. They can really slow the descent unless usually they do, right? Unless there's a real serious market development or news driver. But to me, right, just trying to say block out all the other factors, this thing looks primed to go. The mega caps look primed to go. Let's go to QQQ. This also to me looks primed to go, but with the caveat of the hesitation, right? We got to wonder what's wrong with this, that this is not going. And is that the signal? Instead of being this great, hey, I'm picking this up on the cheap, are they making it too easy for me to buy tech cheaply still? Why are they doing that? How come this hasn't, could it just be they rotated out of amazing winners? Could be. Are they interested in other things because they think the economy is going to really start to branch out, and that we're going to see growth really pick up? Could be. I don't know. I'm not privy to those thoughts, but this to me, again, higher low, you're about to break out of a consolidation, and that could give you some more momentum, and you could be right back at this intermediate high, and you could be, that you get through there, you really should extend this leg that could be starting here, and you probably should definitely challenge this. That's what you should do. But remember VIX sweet spot. Remember September, October election year performance. Remember the lunar assist, right? These are all the things. Right now, this is already overbought though. You're at 69 on RSI on the hourly, but the good news for bulls is that they're only at 56 on your daily. So I'm going to say the daily trumps the hourly, right? It's just that if you're seeing selling, you shouldn't. If you see a little selling early on Monday, it shouldn't be a surprise because you're already overbought. It wouldn't be something that triggers a massive sell-off unless there's news. But I'm just saying it wouldn't be shocking to have a little bit of weakness based off of that. Now, we all know, though, these guys typically don't do that. They typically just ignore it and just keep going with the bullishness, on the opening. But there's that. So you can see the triangle. All these things are happening. There's no reason for this not to go. And except for all that, right? But in a neutral environment, this should really, in my opinion, this should go. It should really take that high out, that intermediate high we talked about, and you should be back at least back towards gap closure. That's what I would say in a normal market environment, if that even exists anymore. That's what I would normally say. I don't have any problems with the breadth. The sectors are back on their horse. It's just the problem is we're in a risk off, risk on market still. We're not getting that really a lot of individual breakaway. XAU maybe really picked up its relative strength versus the market, but a lot of other things just went along for the ride. Some a little stronger, some a little weaker than the market overall. So there's your cues, but I would have no problem taking that breakout buy above Friday's high. If you want to start fighting with this, I think you may as well pick your fight right where the 20, the 50 in gold and the 20 in light blue are. That's the first sort of fight zone. But I remember, the long-term trend on those other is still up on the longer-term moving averages. So I think you're fighting a tough technical battle, but the only thing being that, right, that if it is going down, I would think it's in a big way. It's probably due to news or pending news or the assumption that we're going to get news. But the diamonds also look really good, right? You've got a 69 on your daily. I'm sorry, on your hourly. You have a 61 on your daily, right? So, and they closed. I think they pretty much. Well, let's say in spirit they closed that gap, and now they have a higher low in place. The lines that everybody laughs at, they dropped below there, scared the hell out of people, brought it back up, and then squeezed the hell out of people. So this is their game, and they're good at it. So there you go. And now you're above all the SMAs again. And you could see that, not that it really matters that much, but there was an emphasis on that kind of punctuation mark on the Friday volume side. Not that that's a big trader, but that's really what you want to see when you're, historically as a technician, you like to see the volume supporting the action, especially, in the bull side. You really want to see that people really continue to step up and buy in bigger ways, but demand, trying to just shares changing hands in a big way, but supporting the market, but real close to the all-time high. What are you going to say? And it can't be surprising after what we saw in XLI and XLB. Just can't be, right? These things, those things doing it, XLE helping, and everything else going too. I mean, XLC, XLK, we already talked about briefly, but I mean, they got those former leaders doing their thing to a degree again too, right? You got, like we said, the mega caps are poised, but I really believe that could be the telling sign that if you're kind of like, why is this market not rallying more? Why are these megas not going? Something's telling me that there's something there. There's a sign there. Here's your IWM, already overbought, 71 on your hourly, but only 56 on the daily. So definitely has plenty of room to go before it gets overbought on the daily. Easily could be right back up to this level we've identified near the 225. Like I said, in a bull market scenario where somehow they just say, damn the torpedoes, I don't care about the election, everything's fine, I'm just going to run. Probably historically not a likely scenario, but would it be something that would cause most people's jaws to drop, and would it cause most people to be shocked by it? So could it be like the most painful of the pain trades? Yeah, I'm just throwing that out there. I'm not forecasting it. I'm just saying that if you saw them bat out of hell this thing into late October from here, that might be that might be the scenario that's least expected. Let's put it that way. So just food for thought. So yeah, this is working its way back up, and this to me, with a higher low above all your SMAs, kind of still the most challenged of the four, obviously, but it has so much upside potential. Much like XAU, you really want to keep your eye on it, keep your eye on it, keep your eye on it, even if it sort of bores and frustrates you at times, because if it finds a way to work its way up towards here, and they could break that thing out in a bullish market, in other words, everything else is running, and they get that going, that thing could start to become explosive. It's lagged behind for so long, so the rubber band effect is there. But this is a volatile trader. It moves around a lot. I don't really feel like it's as clean and tidy as the other charts that we looked at in the major four. I would just expect it to do more of the same and just kind of be volatile, for now. Um, that's what I would expect. It's just a good trader. I mean, you can get in there. We often use it at least as a bonus name because excellent liquidity, good trading, and it doesn't have the correlation. So if everything else is sort of bundled together, this thing can act independently. So sometimes when those are a little boring, this thing can still do something. Let's put it that way. But overall, I don't think this is as good. I think if they can work this up somehow by the end in the last 2 weeks of September, I think the charts are going to look really good here. That's going to look really good. Now, it would be very, like I said, this would sort of be a shocker, but it would be quite good in terms of the potential if they were able to pull that off. And again, we have to always remember all the work we do to prepare is worthwhile, I think, but you still have to talk about and appreciate scenarios that you don't agree with and scenarios that seem unlikely and just go with them. In other words, it all comes back to trade what you see, trade the market that's in front of you, and just continue to evaluate. And as long as you feel like that dynamic that has been working is still in place, just continue to stay with it as long as you can. You see signs of it changing, hedge or close and get ready to either re-enter or potentially, right, take the counter side to what you have been doing if you see signs of faltering one way or the other. But overall, like I said, I think it looks really good. I'm probably just going to end it on that note and say it was kind of a whirlwind of things we covered, but I think I hope at least the time spent educating people that are newer it was worth it for some people, because I wish someone would have told me that. I would have avoided a lot of early pain in my technical trading career when I really thought that there was this great opportunity to break a key level, and would be willing to be a little more patient with it. And my extra patience in those scenarios really blows up. And that's one of the lessons about counter trend trading, that you've got to be, I think, double secret, super extra careful when you're trading counter to the long-term trends, and especially in this a bull market trend, and these guys have got a hold of the market, and they still do to this point. As you can see, they're very close to new all-time highs, and a couple of really good days they could have the Qs right back towards that too. It's not like we haven't seen that before. So then they pretty much have almost everything but IWM really, really there. So anyway, on that note, thank you for tuning in. Due to my obligations, I had to do what I had to do, so I had to record this. I'll probably go right back to the Friday recordings. I hope everyone had a good week last week. Hope everyone had a good and safe weekend. I want to wish everyone the very best and most nimble trading in this week ahead. And thanks again for tuning in, everybody.